And you're welcome. And for those of you who are here face to face, you're also welcome. Just a brief intro. That's my. If you can't see me, obviously I put my image there so you can see who is speaking. My name is Valentine T, and yeah, those are my credentials. Let me go right into it. I'll probably how much time do I have? Presentation, and then does that include questions? Okay, I'm told I only have 45 minutes to try and I think 45 minutes will fine. All right, I've got 45 minutes to try and speak to you about CFA, the various levels. But before I do, let me just do a quick survey of. Uh, we did a quick survey. 19 of you responded to our survey. We're trying to find out whether you're attending open day or not. 73% of you said you'll be attending through live stream, so I'm sure you're online now. But maybe others are still going to join as the day goes. We go deeper into the day. 21% of you said you would be attending on campus, so you're welcome here to our campus. What level are you going to be studying? It looks like almost 80% of you, that's 78% of you, mentioned that you would be looking at CFA level 1. Hello. All right. You'll be looking at CFA level 1, and 10% of you are not yet sure. I guess that's why a number of questions came, because you're not sure which level you're supposed to fit in. My hope is that we're going to try and address all your questions. We did receive a few questions that you have failed to ask before, and we've captured those. We're going to try and answer those questions. You'll be more than welcome to ask additional questions. Okay. We asked if any of you have taken CFA exams before. Almost 95% of you said you have never taken a CFA exam. I think a very small percentage said you've taken before, you failed. And then we asked, how did you study when you took the exams? Obviously, this relates to those who have taken the exams before. It looks like the breakdown, 36% you're studying for the first time, studying on your own. 26% of you studied through another institution. So I'm sure you are here today to check who is CharterQuest and what we could do better than the other institution where you're studying. So hopefully we can make our case to you. And the other percentage, almost like it's equal split. Some of you are studying self-study. Self-study is not very easy, even though CFA says the exam is a self-study thing. Anybody who has tried to study by themselves know that it's a very CFA is not something that you can easily study on your own. That's why we're here to assist you as an institute. Okay, let me just recognize the questions that you asked, and I'm not going to immediately answer them, but I'm just going to recognize them. I'm going to answer them at the end. Okay, question number 1, I would like to learn more about the CFA and doing exams. Okay, that's what we'll be covering today, so it will be part of our presentation. The structure of this exam is also part of my presentation. What is the pass mark? I'm going to talk about it. That's part of my presentation. What are the rules and regulations in order to register to write this exam? Again, I'm going to talk about that, but if I miss it, I'll come back to these questions at the end to make sure I've cleared everything. What is the pass rate for CFA level 1? I'm going to address that. After how long does the marks come out after writing the CFA exams? I will be addressing that. What's the average pass rate of your courses throughout the year? I think that's similar to question 5. We're going to talk about that. Can I write with a 3-year bachelor's degree? For someone with an engineering background, is the CFA a good program? If I'm interested in quantitative investment analysis roles, I'm going to address that. What are the requirements? This number 11 is asking about exemption. I'm not sure. If you don't ask this question, you need to clarify. Are you asking whether you're going to be exempted? I don't know, but we're going to try and address that. The question is not quite clear. Is it possible to gain entry for CFA exams with the financial planning qualification? Okay, I'm going to help you answer that. Okay, there's a part B of the questions which my colleague who introduced just before I came in will be answering. It has to do with the operations, how we set up things and make sure that we can support you with your CFA journey. I'm going to skip that because she will come back and delve into that. Okay, so I'm going to tie my overall, because the vast majority of you said you're getting to CFA for the first time. you don't really know what it's all about. I'm going to tie my overall presentation to an overall understanding of CFA, what it means to be a chartered finance analyst, the syllabus content, the exam structure, what you expect, especially after you finish your CFA and all the rest. Okay, so let's start with ultimately your goal. Your goal, you want to, is it both of you want to do CFO or one of you? It's mainly you. Okay. Okay. You're accompanying her for now. See how it works, and then you can jump in. Oh, you're on the similar program. With us, Chatakwe. Oh, okay. You're welcome. Man. And then you pulled her to come and also do CFA. Okay, great stuff. Okay, let's see. I hope you like it. What's your background? I mean, your previous, you have an undergraduate degree in what? Oh no, you're the kind of people who would do. Okay, I thought you were gonna give me some weird field which doesn't have accounting and finance. Okay, you got your cipher. Yeah. Okay, good. All right. If you're online, sorry, I was just chatting with a few of your colleagues who are actually here face to face. Okay, the goal is to become a CFA charter holder. Okay, that is, if you're trying to get this qualification, that is really what your vision is. I want to have these three letters behind my name, ABC CFA. But let's look at broadly. This is now broadly around the world. What are the major areas of, I'm sure you know as a CFA holder, your focus is about investment. Your focus is financial analysis, but it's about investments, okay? So you're advising clients, or you might be doing your own investments, advising clients on where to put their money and all the rest. So what we have here is the four, or I'll call it the five broad areas, very broad areas of investment, okay, which you can expect to end up in. Okay, you can either end up in equities, okay, in that field is really about advising clients which kind of stocks to pick, both short term, long term, and medium term. Equity is about how to become a shareholder of a company, when to invest, when not to invest, when to come out, and all the rest. So that's a broad area. Okay, there are some other investors or fixed income analysts or CFA holders who focus on fixed income, which is the debt side. Traditionally, you either put your money in equities or debt. Okay, there are people who specialize in the area of debt. Okay, CFA itself is not it covers everything, but you could end up in any of these areas. Advising clients on when to buy investments, then you look at things like interest rates and all the rest. Private equity, it's also, I mean, 30 years ago, equity was just seen as, you know, equities for listed companies. But the last 30 years, there have been major industries like venture capital industries, angel investors. No, it's a rapidly expanding area of equity. How do I put my money invest in equity, but not necessarily in equity of a listed company or a company which is listed on the stock exchange? That area is called private equity. So it is grown enough to be a separate industry on its own. So you could end up either being there, which is advising on equity for listed companies, or advising to invest in private business. Okay, there is also another area, derivatives. Okay, financial instruments that derive their value from the underlying spot market. You could have gold derivatives, forward contracts, futures contracts, option contracts, different types of financial instruments that derive their value from what's happening in the spot market. Also a rapidly expanding area. That could be one area that you could find yourself. And then there's another area which is called real estate. Real estate is probably what the average person going to CFA, you may never really have experienced equities. You're just seeing from a distance. But real estate, you probably live in a home, okay? That home is an investment. Maybe it's a private residential home. It looks like a small deal. But there are guys out there who focus on real estate, you know, commercial real estate, residential real estate, different types of when to go into the real estate market, when to come out, the long-term investment implications of that is also another major area, okay? I'm not going to spend so much time about job titles. I mean, this job title is just generally, I mean, you could end up as a chief investment officer, which is the equivalent of a CEO in a traditional head of a company is a CEO. In an investment banking or a professional organization which focuses on investment analysis. You'll be headed by a chief investment officer, not a CEO. But you could also end up to be a portfolio manager who would, I mean, sometimes you build a portfolio with all these advising clients, when to add to the portfolio, when to take out from the portfolio, and all the rest. Yeah, so those are some of the roles. I'm not going to go through every single one, but those are some of the types of jobs you could end up as a consultant, risk manager. Okay, let's get straight to now. Ultimately, if you're trying to end up in any of these spaces, sorry, I know you're on. I want to make sure that you can see where I am. It's frozen. Okay, sorry if you're online. We're just trying to see this. Yeah. Apologies, if you're online, just give us a second. We're trying to correct a technical issue here. Otherwise, you won't be seeing. You won't be. Okay, good, good. Okay, all right. Now, okay, thanks. Thanks for your patience. Okay. Now, if you're looking to have this designation behind your name, okay, why is this? I should use my finger. I should use my finger. Yeah, this is the pen for this, right? Okay, you're using this. No, I don't want to write. I just want to show. Oh, yeah, but now, okay. All right, thanks. Thanks for that. Sorry, apologies. Okay, no, it's okay. So if you're looking to get here are the 10 things you are looking to study. Okay. It doesn't matter whether you study level 1, level 2, or level 3. There are 10 things. It looks like, oh, no, sometimes you're going to say, look, I've done these things in my BCom, so it should be fine. It's easy. It'll be easy for me to do it. I'm sure if you have a BCom in accounting, in finance, in some related field, you find these various topics fairly, there may be modules that you've studied, but do not underestimate. CFA is a different animal. But let me just go through. There are 10 syllabus areas that you would be covering as part of your CFA curriculum. 10 of them. From level 1 to level 3 is the same thing. Okay? It's the complexity which is altering as you're moving from the levels, but you're still covering the same 10 things. The first one we're going to talk about, the first one is quantitative methods. You can clearly see here, when you're in level 1, quantitative accounts for about 10% of the syllabus. As you move to level 2, it's now between 5 and 10. As you move to level 3, it's 0%. So the idea is that by the time you go to level 3, all the technical aspects of deploying quantitative methods to making investment decisions, you have mastered them, and then level 3, we don't need to cover that. Okay, I'm going to talk to you briefly about what each of them entail. There's economics, 10%, 5 to 10, 5 to 10, fairly constant throughout. There's financial analysis and reporting, which is what we traditionally know in terms of financial accounting. 15% level 1, 10 to 15% level 2, 0% level 3. So by the time you go to level 3, we're done with financial accounting and reporting. Corporate finance, 10%, 5 to 10, 0% in level 3. Equity investments, 11, 5 to 10, 5 to 10. Fixed income, 11, 5 to 10, 15 to 20. Derivatives, 6, 5 to 10, 5 to 10. Okay, you see the bulk of it is sitting with portfolio management. Okay, in level 1, portfolio management is just 6%. Level 2, 5 to 10. By the time you go to level 3, it explodes. Okay, it is now almost half the syllabus. Okay? You almost find that in level 3, fixed income and portfolio management, they account for almost 70% of the syllabus. I will talk to you a bit why that is the case. And then obviously you end with ethics. Okay. Now, but before I go in to show you how these things are put together, let me just quickly talk. For those of you who are still thinking whether CFA is going to be for you, I think I should spend a bit more time into each of these areas. Okay. In summary, when you look at quantitative method is what you call back in varsity statistics. Okay, I know that some universities will call it statistics, some will call it financial analysis, sorry, statistical analysis. Some of the buzzwords which are used today are called machine learning and all those things. But in essence, what you are looking at there is before you're going to become an investment analyst, you would have to analyze the business environment. Now, the business environment has data about the economic performance of the investments you are looking at. That could be the returns, the risk. How do you collect all this data out there, which represents the return, the risk of a business, and quantify that in a manner that, and we're not talking here about financial statements. We talk about data out there, okay? Share prices, interest rates, exchange rates, okay? Ultimately, investment decision is about what is the return, what is the risk. That is what this thing is all about. What is the return, what is the risk? But now if you go into return, you realize that there are so many different ways of looking at return. Okay, the most easy one you probably would have heard about is what is called mean, arithmetic mean returns, which is which is like average, which is what you would have covered as part of your university. But when you come to CFA, you hear about concepts of mean like arithmetic mean, geometric mean, harmonic mean. You probably have heard concept of risk like standard deviation. When you come to CFA, you hear about standard deviation, you hear about Sortino ratio, you hear about target deviation, you hear about one-sided deviation, you hear about value at risk. So what CFA actually does is it takes what you already would have studied in varsity as part of your statistics and say, that was just introduction. It is just statistics 101. Now let's take you into statistics 150. It goes deeper and deeper into every element, from correlation analysis to statistical coefficients, to correlation coefficients, to regression analysis, to hypothesis testing. All those are tools that you're going to use just to understand data, because as part of decision making, you would have to collect data, okay? And how do you organize and summarize that data and say, yes, this is what this data is telling me, therefore this is what we should put our money into, this is what we should not put. And data mainly from the external environment, okay? That is what, because data in the internal environment will be dealt with when you get to financial reporting, because then you are actually looking at the performance of the company. So quantitative method takes you into how to put data, and then there is economics. Economics then kicks in to say, but remember, this data that you are actually trying to collect, the data reflects the economic environment, okay? If the GDP is rising, some companies will perform, some will not perform, okay? If the international trade is doing well, something will happen to our exchange rate, it could affect our imports and exports. So all the data that you have learned on how to in quantitative methods, that is now put in the context of the environment. Obviously, if you study economics 101 at school, they'll tell you demand and supply, inflation, macroeconomics, microeconomics. Yeah, you're going to expect to cover those things. But again, if it takes it a bit deeper, okay, it incorporates aspects that you can tie from the economics. Now, if you've done business economics at school, you're almost taught as if you're training to become an economist, okay? If interest rates go up, what happens to exchange rate? If GDP goes up, what happens to this? Okay, CFA does all that, but says, okay, but what happens to, would you invest or will you not invest in a particular market? So it takes the same concepts you've learned and then tie that back to these areas. Okay, based on this economic analysis, where do you think the equity market is heading to? Where do you think the debt markets are heading to? Where do you think private equity markets will be heading to? Where do you think the derivatives? So it takes the same thing you've learned in economics and adds an additional layer. To say, okay, you have all this from your background. Here's how we use it to make investment decisions. Here's how we use to know where the different markets are going to. Because ultimately, investment is about making a decision today to make returns tomorrow. So those who understand market movements and the direction they're headed can take the right position way before they get there. So economics starts to ground you into see these things that you are seeing in the economic environment, Here is what it means for the equity markets. Here is what it means for the debt market. Here is what it means for the derivative market. Here is when you should be coming out of this market. Here is where you should be entering this market to take a position before others get there. So that is a main focus of economics. And obviously that gets, refined and refined and refined as you move from level 1 all the way to level 3. Financial analysis then says, okay, but at the end of the day, especially if you're going to be investing in equities or debt, remember that a company has a balance sheet. Assets is equal to debt plus equity. Okay? The companies need to raise either debt or equity to invest in assets. So where do they get this debt or equity from? They need investors who invest in their equity. They need investors who invest in their debt. But before investors invest in equity and debt, they have to understand the company. So this part literally is still data, but it's now the data you're analyzing is both qualitative and quantitative data in the external environment. Economics tells you why the data is the way it is. Financial statement analysis says, okay, all this data that you understand the way it is from the external environment, okay, in economics, and you understand how to analyze it externally, here is what it could be doing to the company you are considering to put your money into. So it takes you into financial analysis. Okay, let's break it down. Let's start from income statement. Let's go to balance sheet. Let's go to ratio analysis. Let's study each element on the company's financial statement. If there's cash flow from operations, let's break it down. If there's current assets, let's break it down. If there's fixed assets, let's break it down. If there's inventory, let's break it down. You break it down and you start correlating those various components to help you get a solid understanding about how these two things they are affecting the actual performance of the company. Because ultimately, if you say yes, put your money in equity, that equity is owned by some company. It's the equity of some company. If you say put your money in fixed income, 90% of those who are coming to raise debt in the market are companies. Now, if you don't understand how to analyze your financial statements, then you're just going to say put it in the wrong company and all the rest. So this part literally takes it all the way to level 3. Obviously, by the time you go to level 3, the assumption is, okay, you know in and out of how to analyze a company. Okay, but how do you apply that in a portfolio management? How do you pick the company? You could say, I want to analyze ABSA. ABSA looks good. Well, it doesn't mean pick ABSA because it is good, because when you invest, you have to invest in a portfolio. ABSA might be good, but when you put it inside the portfolio, the way it interacts with the other investment in your portfolio ends up being bad. Okay, so this part says, okay, that's why when you get to level 3, CFA already says, okay, no, you know everything about financial analysis. What we now want to know is, so we're not going to test you whether you can analyze a business. What we want to know is, if you take that business and put it in a portfolio, do you know what will happen? That's why this becomes 0. This becomes 0, then portfolio management starts to rise. You say, take it, put it in this portfolio. Now tell me what is going to happen if it is in that portfolio. Okay, now, then this part, then says, okay, corporate finance. The point here then is to say, okay, when I analyze a business, is to decide whether I should invest in that business. And I'll invest in that business either by investing in their equity or in their debt. But if I decide that I want to invest in the equity of the debt, I need to go to a corporate finance market. There's a market where that debt and equity is bought and sold. Now, so these two things, it says equity investments. This one says corporate finance, this one says fixed income. I'm going to combine 4, 5, and 6. This is what is happening. If you analyze the business, you say invest in equity. You have to go into the equity market. If you say invest in the debt of this company, you have to go to the fixed income market. Okay. So what CFA is trying to do is to say, depending on what your analysis there says, whether you should invest on debt or equity, it is not enough to simply say buy ABSA. You need to understand how the equity market where ABSA trades operates. There is a stock exchange, it's got rules. There are brokers, there are all these guys who are there. Okay, there is a way the stock exchange, the market indices, to understand how the ABSA does not just trade somewhere. ABSA operates in a market. That market is called equity market. So if your financial analysis says invest in equity of ABSA, number 5 then says, but let's understand how the equity markets work, the equity market in which you will find ABSA. you need to know, is ABSA a big player, a small player? Is ABSA part of the all-share index, or it is not part of the all-share index? Okay, if it is not ABSA, what are the other firms similar to ABSA in that sector? Similar risks, similar returns. When do you deal with a broker? When do you not deal with a broker? When do you go direct? When do you not go direct? Which indices is ABSA measured against? So that way, if you buy ABSA, what would you measure ABSA against? There's a whole set of rules about how the equity market functions. So number 5 literally prepares you to say whatever you decided at the end of this, if you go equity, you must understand how the equity market functions before you even play in that space. If you have done this and you've decided you want to go debt, you must also understand how the fixed income market works. It's a separate market on its own. It's got its relationship with the equity market, but these are two different. Okay. On this one, you're going to find all these share price and all the. You go to fixed income, nobody's talking about share price. We're talking about interest rate, Macaulay duration, jumpstart duration, different concepts of fixed income and all the rest. You know, working with fixed income finance, with major institutional investor and all the rest. So it's a totally different market. Okay. Now, but number 4 then says, okay, these two combined together, whether you go into the equity investment market to look for money, or to the company, if they want to raise equity, they go into that market. That's where you will find them to invest in their equity. If they want to raise debt, they will go into the fixed income market. That's where you will find them. When you meet there, it's a market. Imagine you cannot be buying things in the market you don't understand. You need to understand how prices are determined in that market. Okay. So then this pattern says, when the two of you meet in that market, that's where corporate finance comes in. Okay, why are we meeting? Companies are coming there to raise finance. That's why they are there. You are coming there to give them finance. So corporate finance simply says, okay, if we're going to be raising finance, where do we go to? Who do we meet? But apart from that, corporate finance then says, no, but remember that the same way you are analyzing the company, whether to invest in their debt or their equity, the company is also sitting in the board and deciding we want to raise money, but what is the best money to raise? Should we raise debt or should we raise equity? That's what you're going to see in CFA. It's called financial strategy. Because at any given point in time, you want to grow, you need to raise finance. But which one is best? There is a time when equity is best than debt. There is a second that makes debt. You look at the cost, you look at the exchange rate, you look at the profitability, you look at your shareholding structure, you look at your risk profile. There's a lot of things. You look at your cost of capital, your weighted average cost of capital, and the implications for your share price. There's so much that you look at. So corporate finance then says, okay, remember that because this teaches you where to put your money. This teaches you how to put whether it's debt or equity. Now, why are we doing corporate finance? Surely, if you know that ABSA is trying to expand in Cape Town, okay? Sometimes you hear companies, when they come in their annual general meeting, they will announce, integrated reporting requires that companies talk about their future, where they're heading to. So you read ABSA's strategy. ABSA is planning to branch off into a market. They will tell you where they're, because integrated reporting requires that they report not only on their historical performance, but where they're heading to. Now, as an analyst, ABSA will not tell you how they intend to fund that strategy. They will tell you, because corporate integrated reporting doesn't require companies to talk about how they fund. It requires them to talk about where they're heading. Now, surely then, if you read the annual financial statements of ABSA and you know that ABSA says we're going to be branch off into, if you had a way of taking what ABSA says they're trying to, and looking at ABSA's balance sheet, just the capital structure, not the whole, just the capital structure, to determine whether you believe ABSA is likely to fund that deal with debt or equity, it puts you ahead, right? Because if you know that ABSA will be raising for that thing they want to do, they will be going with equity. You can take positions. way before ABSA comes to the market. Because once everybody knows that ABSA will be raising equity, ABSA share price will rise. Especially if they believe that that investment is going to be good, share price will rise. So you'd have already rushed and bought ABSA company. So why are we studying corporate finance? We want to know the same way we are looking at companies from outside. The board of directors also looks at its capital structure to decide how to raise money. So if we know they are thinking about cost of debt, cost of equity, the weighted average cost of capital, no, let's pay down our debt. If we know how they are thinking inside the company, what principles they are following to decide when to raise finance and whether to raise finance, it puts us ahead. So what CFA is trying to do is study the business study the financial statement, decide whether you want equity, go to the market, let's understand, then study how they make a decision whether they are likely to be raising equity or debt. So that you go to the market before others come to the market. That is a connection between these three components. Number 7 then says, okay, as you enter the market, there is always going to be financial risk. By the time you buy debt, there's a danger that interest rates will go up and down. By the time you buy equity, if this investment is an international company, there's a danger that exchange rates would affect the performance of this company. You have to understand that risk should be managed at 2 levels. There's what the company does to manage risk on its own. The company will be buying derivatives, forward agreements, interest rate agreement, option contracts to manage its own risks. You need to understand, because if I say I'm going to be investing in the next country and I'm open to exchange rate risk, I might buy foreign currency contracts. Control that. Sometimes these contracts, they account for a very big component of the company's performance. Obviously, there's a part of where you have to account for it in the books. You need to understand those instruments that the company is taking to contain its risk. What is it doing to the balance sheet of the company? What is it doing to the income statement of the company? Okay, is it protecting the company? Because you should take it to control the risk of the company. You shouldn't be taking it to make money. But some companies take it to make money. And that may open investors to even more risk. Because those instruments, they are also very volatile. They derive their value from what is happening. If you have a gold contract, it derives the value from what's happening in the gold market. If you have an interest rate contract, it derives the value from what's happening in the interest rate market. If you have a forward contract on exchange rate, it derives the value of what's happening in the exchange rate market. So to the extent that the markets are very volatile, those derivatives also are volatile. So the volatility can damage the earnings of the business. So you, CFA wants to make sure you understand that companies are going to take on derivatives, control and mitigate their risks. You need to understand what derivatives are they taking, why are they taking it, what is the implications on their performance, okay? Because sometimes you can get everything right, but the volatility in derivatives market creates risks for you as an investor. That's the one part. The next thing CFA is trying to do with this is, but even you as an investor, after the company has used it to control their own risk, if you pick investment and put in your portfolio, the sheer way in which that investment correlates with other investments would open your own portfolio to risks. So it's not only the company worried about its risks. The company may have contained their risk, but when you pick them and put in your portfolio, their interaction in that portfolio creates its own risks, which is none of the risks of the individual company. They just arise because they are now in your portfolio. You also need to manage those risks in your portfolio. So you also, the same thing you learn about derivatives, how companies use it to control their risk. You need to learn how to also buy them to control your own risks when you put the companies in your portfolio. So that is the focus of this company. How do companies use it to control risk, and how do you use it to control your own risks in your portfolio when the investments are in your portfolio? That's what the CFA is trying to do here. Number 8, CFA is, okay, there are alternative investments. What is the idea? CFA says there's what is called traditional investment. According to CFA, traditional investment, this too is what we call traditional investment. If you look at everything, will be all the way here. When we talk about fixed income, it's traditional investment. We talk about this, it's traditional investment. The idea CFA says, okay, alternative investment is anything which is other than you investing in the fixed income or in the equities of a business. Like real estate is part of alternative investment. You're going to start about commodities, bitcoins, all sorts of things. There are all these other investments where you just barely hear about bitcoins, commodities, and real estate. Even private equity is deemed to be part of alternative investment. Venture capital work. So simply saying all other investment which is not normal debt and equity as we know it. Okay, either giving your money as debt, buying the bonds of a company, or giving your money as equity to a company. Every other investment which is none of those two is what we will call alternative investment. So when you get here, CFA says, okay, inside this alternative investment, there's a section for how to invest in real estate. There's a section for how to invest in private equity. There's a section on how to invest in commodities, gold, copper, diamond, and all those things. It focuses on that. There's a section for how to invest in venture capital work. Okay, any other investment you barely would have been hearing about, you say, but I wonder what goes in here. They've grouped that, and then there's a deep appreciation. Because at the end of the day, you will come out, might end up here, in an investment field which is none of the traditional ones as we know them, as debt versus equity. Okay? And then number 9 CFA says, okay, since you know how to analyze data, you know how the economy works, you can read the balance sheet and income statement of the company, you know how companies decide whether they want to read debt or equity, you know how the equity market works, where you find them, you know how the debt market works, you know how they control their risk, you know the different types of investments. Go pick them, put them in a portfolio. Because you will never, an investor is not going to pick one thing and sit there. You have to, then you're a speculator. Because you're trying to say, how do I increase risk? How do I increase return and my risk? And you're not going to do that by just picking one thing. You're not just going to pick debt or pick equity or pick some alternative investment. You need to build a portfolio. That portfolio should correlate to optimize your return and minimize your risk. So this part then says, okay, here's how we take it all and then build the portfolio. The portfolio could be our portfolio, it could be a portfolio for our client. Our clients could be very wealthy individuals who got the money, they don't know where to put it. That's why you're studying CFA. They're multi-billion-dollar guys. They got the money. That's why portfolio is combined with wealth management. See, you will be hired by very, very wealthy guys. They just want somebody who is a very good analyst who can tell them your money here, take your money out from here. Okay? They just know how to go make money. Okay, maybe there's an entrepreneurial family, they build a business. Okay? The guy can run an aircraft company, so he started a family business, it's been growing, but now they're sitting with all this cash. Okay, he's getting old. He knows that when he gets old, he will be retired. His children might not even be able to run the business, but he wants to invest whatever he's made so that he can generate wealth for his family. That's where wealth comes. So you need to learn how to build portfolios for them. How to pick everything you've learned here and build portfolio. So you might end up in portfolio management or in wealth planning. You find in the banking sector there's a whole department, there's an field which is called Certified Financial Planners, CFP. Okay, it's a separate issue. Each of the banks here, they have a private wealth service where they are looking at high net worth individuals. They'll appoint somebody who advises them. Okay, I see you are making 10 billion a year or 100 million. Here's the kind of, you can put your money in unit trust. Here's how we're going to build a portfolio. So that's why it's a big deal level 3, because we're not putting it all together. So, okay, no more financial statement analysis. Do you know what happens when it goes into a portfolio? So that's what we're trying to do here. And then the last part says, okay, yeah, but there's the ethics part. Just understand that every profession, by the time you finish, you're a professional. Okay. How am I doing with time? My time is up now. 15 minutes left. Okay. But by the time you practice If you're a member of SAICA, for instance, if you see a SA, you belong to a professional body, you must behave in a particular way. There's a code of ethics, there's a code of professional standard, how to conduct yourself even when you do the work. So CFA also is very strong on ethics. It says throughout this level, if you see there's only one thing which almost remains constant throughout the levels is ethics. How do we make sure you behave in a manner that displays probity, does not bring the profession into disrepute, and protect the integrity of the capital markets and all the rest? So there is that last component. Now, ultimately, I think, so if you're out there wondering what is it for you, I think that's some of a summary of what you'll be doing. Everything I've explained is what you'll be doing for 3 years. It's a difference, it's getting more and more complex as you're going along. Okay, now if I was going to wrap it up, I would say, okay, for those of you who are asking the structure of the exam, obviously CFA has 3 levels. There's level 1, there's level 2, there's level 3. Some questions were, can I get exemption? No. CFA does not give any exemption. Anybody who goes into CFA starts in level 1. Doesn't matter whether you have a PhD in finance. It's not like CIMA, ACCA where they give exemption. No, you must start from level 1. Okay, so there's no exemptions to CFA. Okay, and I'm going to relate to the other question. But here's what you're looking to know. Those same 10 things that we talked about, they are here. Like we say, the same 10 things you're studying throughout. The difference is that when you're in level 1, CFA is more interested in just your knowledge and understanding. In other words, in level 1, they're asking you, do you know the tools? So each of these topics, there are tools that you use to make decisions, personal decisions. CFA is more interested in just your ordinary knowledge, okay, of the tools. Do you understand the tools? When you get here, CFA is more interested, but can you apply the tools? Because knowing something is one thing, applying is something else. Okay. Since you know and understand the tools, it says application of investment tools in asset valuation. All investments involve you either buying some asset or selling some asset. Because investment means acquire asset. And you can't acquire asset unless you can value it. Because how much are you paying for it? So what CFA tries to do is to say, okay, you know the tools. Now, please remember that all investment decision will lead you. It's about 2-3 things. Buy an asset, hold an asset, or sell the asset. That's all you're trying to do, all your investment. It's time to buy this asset. It's time to sell this asset. It's time to hold on to this asset. That's just the 3 things you're trying to do. Okay. So this level then says, okay, but whether you're going to buy, you buy an asset if it is undervalued. You sell an asset if it is overvalued. You keep an asset if it is fairly valued. So all CFA is trying to do is, okay, let's go into valuation. How do you know whether an asset is overvalued, undervalued, or fairly valued? Because that is where the decision will come from. So it takes all the tools to say, okay, if you are analyzing equity, here's how you apply it to determine the value of equity, and here's how you follow to check whether it is overvalued or undervalued. If you are looking at fixed income, here's how you apply it. If you are looking at alternative investment, so it goes back to all those investments and say, okay, let's value it. Let's value it. So it's more the application to say, yeah, this is overvalued. Yeah, this is undervalued. Whether it's real estate or what, that's the emphasis here. But using the same knowledge on those same 10 areas. Now, when you pass this, when you go to level 3, CFA says, okay, I can see that you understand the tools. I can see that you know when an asset is overvalued and when it's undervalued. Therefore, you know when to buy. But you realize when you buy it, it will end up in the portfolio. You realize when you sell it, it will come out of a portfolio. You realize if you decide to keep it, it will stay in your portfolio. So whether it is coming into your portfolio, there are implications. If it's leaving your portfolio, there are implications. If it's going to stay in your portfolio, there are implications. So it's not enough to just say, it's undervalued, let's buy. It's overvalued, let's sell. There are instances where it could be undervalued and you still not buy because of what it will do in your portfolio when it comes in. So level 3 then says, okay, let's put it all together and say, okay, let's synthesize this thing. Here are the portfolio management implications of this undervalue, overvalue, and whether you sell or buy and put in the portfolio. Here's what is going to happen. And yes, and at the end of the day, you'll be interested in not the return on ABSA, but the return on the portfolio where you put ABSA. Because nobody invests in one thing. So you start by analyzing individual returns of individual stock. By the end, you're making decision on what will happen to the returns of the portfolio, not the returns of something in that portfolio. And once you bring this thing in the portfolio, a lot of things is going on there. So level 3 then picks that up. Now, if you're wondering what is the exam structure, multiple choice. If you're level 1 is multiple choice. Exams, very exam in February, in May, in August, in November, 4 times a year. But don't think you can fail if you fail in February, you can't write in May. Even though there are 4 exam sittings a year, if you fail in one, you must skip one before you write again. CFA does not allow you, if you fail in February, you can't just write in May. You can only then write again in August. Okay? So there are 4 exam sittings. The red here shows our course that we are doing open day now for starting in January. Is it January or February? January. Our target is to prepare you to write for August exams. Those who are preparing to write to May, we already started with them 3 months ago. The course normally takes about 7 months to prepare you in depth. So we are preparing now to write you in August exam. Some will go in for August and then they end up shifting November. But it's 2 exams. The morning session is an afternoon session. Each exam is 2 hours, 15 minutes each. You answer 90 multiple choice questions in the morning. They're all computer-based exams. There are a lot of computer centers around South Africa. You go answer 90 in the morning, 90 in the afternoon. Wait for 6 weeks. You get your results and all the rest. Level 2 also is very similar, multiple choice. The difference here is that these are short multiple choice. These are more scenarios. They will give you 11 scenarios. Okay, they will give you. Here is just 1 paragraph. They'll ask 1 paragraph, then they ask you multiple choice. Here they'll give you about 5 paragraphs. Okay, but they will still be asking you multiple choice. It's also going to be morning and afternoon paper. Almost 44 questions, 11 essays, 44 questions, 4 marks per essay, and all the rest. When you get to level 3, it's split into 2. The morning paper, there's what is called constructed response. Between level 1 and level 2, it's just multiple choice, pick the right answer. But when you get to level 3, they want to know whether you can actually, okay? Because here it's about, can you give an advice? So they're not looking at whether you can pick answers. Can you type an answer? They will give you a scenario. So you actually have to type an answer and say, hey, the investor should sell this stock from the portfolio, and here's why I say so. So because these 2 are multiple choice, CFA does not know whether, because there's an element of chance in multiple choice. I'm not saying you can pass it with chance. You have to work hard. But level 3 now tries to see whether you can translate the multiple choice understanding into actually typing out an answer. Okay. So the morning part of the paper is constructed response question, and then the afternoon part is still again multiple choice. So that's almost what you are looking at in terms of structure. Now let me just revisit. I'm wrapping up now. Let me revisit your questions and see to what extent we've covered. If not, I'm going to address them. Okay. The first question that was we received, again, if there are more questions, I hope somebody is checking the platform. If there are more questions, I'll take. If there are more questions, you can type them on the board. These are the ones we received before today. I want to answer them, and then I would like to learn more about CFA and doing exam. Well, that's what we just did. Okay. I took some time explaining what CFA is all about, the content, and all the rest. I'm just taking some time to explain the exams. Okay, the exams are 4 times a year. Level 1. Okay, level 2 is actually 3 times a year. You can write in February, in May, or in November. Okay, level 3 is actually twice a year. You can either write in May or August. CFA is looking at adding more exam cycles. So I hope your first answer has been dealt with. What is the structure of this exam? Is it what I've just answered? Multiple choice, morning session, 2.5 hours, 2 hours, 15 minutes, afternoon session, 2 hours, 15 minutes. Multiple choice, again here, multiple choice. Different is that these are short scenarios, these are longer scenarios. In the afternoon, the structure of the exam. So all the exams is 2 sessions. Morning paper, afternoon paper, 2.5, 2 hours, 15 minutes, 2 hours, 15 minutes. Obviously, when you get here, you have a bit of constructed response. So I hope this answers the question about the structure of it. What is the pass mark? That's a good one. Everybody tends to ask the pass mark, okay? The reality is that if anybody tells you, I know the pass mark for CFA, they'll be lying. The pass mark, CFA keeps updating the pass mark, okay? It's a global exam. So the level of difficulty in a particular session influences the part. If they write a session and the top mark gets maybe like 80%, okay, you find that, and then another 60, the top mark gets 90%. So if the best marks are very high, they will raise the average mark for what becomes the pass mark. If the base marks are very low, they will lower the pass mark. So there is no such thing as what is the pass mark for CFA. We don't know. There are people writing in India and China, Canada, all over. We don't know how they're going to perform. But here's what we tell students. You know what? Don't get lost with the pass mark. You want to play safe, play around 70%. Because statistics have shown that the lowest they have come to over the last 20 days is almost like 60%. There have been some exams where they allow 60% to be pass mark. But there have been also exams where pass mark was almost like 78%. No, so statistics shows that if you aim for 70%, irrespective of the level of difficulty, you should place it. So if I was going to answer you, I would say the pass mark work for 70%. Even in our internal mocks, when we teach and aim you for 70% and more. To say if you do well in your test 1, test 2, test 3, above 7%, it doesn't matter how difficult the exams, you should be able to pass. So work with 70%. What are the rules and regulations in order to register to write this exam? I'm sure you talk about rules and regulations. It's pretty straightforward. Okay. If you have a BCom, it doesn't have to be in finance. Any BCom, you can register for the exam. In fact, you don't even have a BCom. You don't need to have it. If you are studying any field, obviously, ideally, those who are studying accounting and finance, they got a better grounding. If you are studying any field and you are, say, 1 year away from getting your BCom, they allow you to start level 1. So you don't need to submit. You can submit your metric qualification and the fact that you are studying adversity. They will allow you to write level 1. But by the time you get to level 2, you need to have finished the BCom. Okay? That's one route you can use to enter. I know CFA has just mooted the idea. They are now changing it. I don't know if I read it somewhere. They plan to change that next year, where they can even allow you, even if you are still in year 1, you can go into the qualification. So they're trying to make it a bit more flexible. But if your question was about whether you meet the requirements to enter, yeah, you do. If you're adversity, it doesn't matter what you are studying. Rules and regulations, again, you also have to look at which exams do you want to write. There are fees involved, almost like $1,200 US. Sorry. Beautiful one. And you need to have a passport, not an ID. You need to, if you're planning to, you have to apply on a passport because you need the passport to register for this exam. Guys, if you don't ask this question, if there's something specific, the rules are broad. I'm not sure what specific rule, but you can narrow down your question so I can zoom into it. What is the pass rate for CFA level 1? The pass rate the pass rate hovers around 40-48%. So in other words, any given time you write on average, it is very, very rare to hear that CFA published the results more than 50% pass. So level 1, if you're asking the pass rate overall, I hope you are asking overall for CFA, because at Charter Course we're sitting about 58% our pass rate. But the CFA pass rate overall globally is about 45%. So anytime you write CFA exam, more than half fail. The pass rate gets better as you go up. Okay, level 2 is the most difficult. Level 3 you can easily get 50 pass rate. But it doesn't mean the exams are getting less and less. It doesn't mean the exams are getting easier. Remember, the people who are getting to the top, by the time you finish level 1, it's already cleared a number of people. Very strong candidates are going to level 2. So by the time you get to level 3, your motivation is high. You've already proven yourself. You understand the discipline, so it gets easier to pass because stronger candidates are getting there. But it doesn't mean the higher level. But the overall pass rate, and again, it varies from year to year. I mean, sometimes it goes up and it also varies per level. So I hope that answers your question. How long does the marks come out? Work around 6 weeks. 6 weeks from when you write your exam. So if you write in May, sometime around early July or so, you can expect your results. So work around 6 weeks. If it is 6 weeks, 8 weeks. So you can work around that as the length of time to get your result. Average pass rate of your courses throughout the year for level 1, we're sitting at 58%. That's almost like a 20 percentage point higher than the global average. So from that point of view, we're doing remarkably Very well. Can I write with a 3-year bachelor's degree? Yes, I've already answered that. Yes, you can write. It doesn't matter which bachelor's degree, even a 2-year one, you can start. In fact, the new regulation, even a 1-year degree, you can start. But I think by the time you go to level 2, you should have brought proof of the degree itself. For someone with an engineering background, is a CFA a good program if one is interested in investment, uh, quantitative investment analysis? I mean, for someone with an engineering, obviously, if you've got an engineering background, it means your maths and science is pretty strong. Statistics is very much grounded on mathematical principles and all the rest. So if you've got an engineering background, of course you should do well in CFA. CFA is largely quantitative, okay? So if your goal is whether you do it in quantitative investment analysis, okay, CFA is both quantitative and qualitative. I suspect your question is there are some areas, okay, if you went into this is very quantitative. Part quantitative, this part qualitative. This is derivatives is very, very quantitative. Okay, so if you're an engineer and you're saying I'm strong with maths, I want to GCFA, I want to get into the quantitative side of things, then this is where you might end up in this. This is both quantitative and you might end up here as well as here. These are the two most quantitative aspects. So yes, there is room for you to bring your engineering skills in an area that suits your core competencies. Okay, requirements, again, if you ask this question, be a bit specific. I'm not so sure what you mean by requirements. I'm sure most of you have covered in there. Exemption, I've already explained you. There's no exemption for CFA. You must all start from level 1, so there's no exemption. Okay. Is it possible to gain entry for CFA exam with a financial planning qualification instead of? Yes, I mean, financial planning is more the wealth management. Remember, we said here in level 3, level 3 is portfolio management and wealth management. Financial planning has to do a lot with wealth management. Okay? So you're welcome. With financial planning, you can go in. Okay. In fact, any degree, if you've got a degree in IT, even if a degree in maths, you don't. This question almost suppose this candidate believes that your first degree has to be relevant. If it is relevant, you stand an advantage. Surely, if you go in there, your background was in accounting and finance, you probably find maybe 50% of the content, okay, it's familiar. You are just deepening it. But if you're coming from IT and engineering, everything might be new. But there's nothing to say your background has to be relevant. You can come in from anywhere. Financial planning, IT, maths is really up to you. I mean, most of our students, in fact, we've been having recruitments every cycle. You always find that less than 40% are people with a background in accounting and finance. You always have IT guys there, engineer. A lot of people are trying to branch off into finance. They find this attractive and all that. So I hope that answers your question. I'm now done on my part. I'm about to go to your part, but let me just, you do mind if I take the additional questions? Okay, guys, my part was to talk about the CFA and all that and deal. My colleague is going to come and deal with the second part, which you're going to do follow-up questions. But I want to find, are there any questions that arises from what I've presented today? If you're online and you ask these questions, I hope I've answered you. If it was not clear, you can post a follow-up. You can also unmute yourself, talk on audio. Can we hear them if they talk? There's a moderator. Okay, so can we check if there are questions online? Moderator.
Good day, sir. How are you?
Hello?
Hello, can you hear me?
Yes. Are there any questions online?
We only had 2 questions. One of the question you answered it on question number 8, and the second question for Sabelo, Miss Mukunga.
One of the questions I've answered, question number 8. Can I write with a 3-year bachelor? Is it the same question which was posted?
Yes, correct.
Okay, so that's answered. What's the next one?
The next question is related to the COO.
Oh, it's for so the second part is the next question is for you. Okay, that's fine. So my part is fine. For those of you who are here face to face, any questions?
Time frame. Yeah. How long do you have to go qualification? Also, on average exam, what is the time frame?
Okay, good. That's a very good question. For those of you who are online, for your benefit, the first question is, how long does it take? How long does CFA allow you to take to finish the CFA exam from the start? Some professional bodies, they will say, if you want to do ACCA from the date you start, you have 10 years. After 10, if you're not finished, they'll kick you out. So the question is, do we have something similar for CFA? And if so, what is it? No. The answer is no. There is nothing similar. You can take 40 years. you can take 40 years trying to finish. They don't have a limit. Okay. Obviously, the fees will keep going up and all the way. So, but there's no limit as to how long CFA allows you to take to finish. Your second part of the question is, what is the average length of time for each level? You know, I know you will see this on CFA website, which you say, no, you just need to put in 300 hours. Okay. If you follow CFA guide on their website, it says each level needs about 300 hours of study time. As you know, you can do 300 hours in 3 months, in 4 months. If you follow that, it almost seems like, no, I can take 12 months. Especially now with multiple exams in a year, that almost says, okay, I can put 3 hours, 300 hours I write in February. Okay, I move to level 2, there's an exam November. If I write in February, okay, between February and November is 6 months. I can put another 3 hours prepare for this level. Therefore, another 3 hours, level 3 is May. So it's almost like it almost sounds, because I'm saying that because I know you see it on the CFA website, it says 300 hours, okay. But the reality is that less than 1.0001% of people manage to do that. It is hectic stuff. Okay. I would say what from experience we found to be, it's not 300 hours, it's almost like 1,500 hours. Let me be clear with you. To pass a level, you need to, not the 300 hours average, that's CFA. You need like 1,500 hours. That almost means you need to study like for 7 months to write one level. That's why our classes are structured over 6 months. Okay. Now, our classes are structured over 6 months, almost like over 60 to 70 hours of classes. You going through questions. Every concept we teach, we put a multiple choice to show how that is examined. And then there are tests. So how you get to that 1,500 hours is the following. We take about 70 hours teaching you, okay, over a 6 months period. Is it 70 hours? No, not 70 hours. It's 50 sessions. Each session is 3 hours. Okay, so you look at we invest 150 hours. Okay, which is half the time CFSA you need just to cover the material. Okay, book 1 to 6. These 10 topics are structured under 6 books, just to cover every single learning outcome to the end. Apart from that, at the end of every book, you write a test. At the end of book 1, you write a test on book 1. At the end of book 2, you write a test on book 2. You need to be preparing to write those tests. That's hours you are investing at home. You follow? So you can almost be rest assured every week you have to give us 6 hours to 7 hours of your time for the next 6 months. And then out of the 6 hours to 7 hours of your time that you give to us, you need to find another 20 hours or 30 of your own time in the evenings and weekends to review what we've been doing for the 6 hours you gave to me. Because that 6 hours, a lot I cover. A lot of questions. You have to go and practice. So I put in 6, you find another 30 yourself in the evenings and weekends to include to the 6. The next week I put in another 6, you find another 25 to 30 to that. That's how you get to the 1,500 hours. If you do it like that, at the end of 7 months, you should write your exam pass. And our test will tell you way before, because there's test 1 or exams, you start telling whether you're falling behind, are you ahead, do you have to double more hours. So work around 7 months, 7 months, 7 months. Maybe you can say, so you can say almost work around 2 years. Okay? But that 2 years, you have to, this is a candidate who is not too busy at work. Meaning, you have a kind of job where you can work till 5 and go home. There are some people who work 8 o'clock, they're still in the office. Those are not the people who's going to take this, because where are you going to find these 30 hours? Let's be clear. I don't want to make you look like you said, where are you going to find, you have to be somebody who is very disciplined. Okay? You work by 5 o'clock, you go home. Maybe if you take a siesta, you put in 2 hours every evening, 3 hours. The weekend, you took it to 8 hours. That's how you're going to keep pace. And that within 2 years. Anything short of that, in order not to mess your whole lifestyle, maybe just work around 3 years. Okay? So you can take the 7 months, so you're not under pressure to write every 7 months. Take the 7 months. At the end of the course, you add another 3 months by yourself. Revise, so that you can almost work like 1 year per level. In that way, it is manageable. Okay, so that's my answer. Any other question? Multiple choice. Yes. I'm sure you're thinking about SIMA. SIMA sometimes give you 4.
I can drop that whole.
But how many choices? It's 4. CFA is a bit better. Yes, it's 3 multiple choices. It used to be 4. They changed it 3 years ago. Now it's 3. You must just choose one. Okay, it looks like there are no other questions. You came late. Are you sure you must have had some questions you wanted answered?
That's all.
Oh, you're fine.
But I'm already like.
Have you already enrolled? Okay, so you're starting with us. When?
January.
And you're writing in August. Oh, okay. So you know you're already one leg in.
Yeah.
Welcome to the club. Okay, guys. It looks like there are no other questions. If not, I'm gonna call my colleague to take over and tell you how we work. Thank you so much for your time. I'm going to run now. I've got a CFA class which is about to start. Okay, sure. Thank you.